going, everybody? My name is Dalton, and today's video is all about how to calculate your paycheck withholding using Paycheck City. And this is a good way to kind of estimate the taxes that you will owe with monthly or weekly, bi-weekly, semi-monthly income. And it's updated for 2019 rules and also for every state. So that's great. And then let's just go down here. So I put in a gross pay of $5,000 per month. I made sure that it was per pay period, not annually. I made sure that the frequency was monthly. Now you guys see biweekly and semi-monthly down here. All this means is how you will be paid on a frequency basis. So biweekly means that you will be paid 26 pay periods per year. So usually that's every 2 weeks. Some months will have 3 pay periods. And then semi-monthly is just being paid every 2 weeks. You have 24 pay periods in a year. So that's just what it means. I'm just doing monthly for this purpose. And then allowances, I put 1 here. And allowances, basically what it means is that's what you're telling the government to withhold from your paychecks and your income. So the higher the allowances, the less they withhold. The lower the allowances, the more they withhold. So the thing is, you want to be in kind of a sweet spot. I'll put a guide in the description below as well to allowances and withholding. You want to be in a sweet spot where you're not really going to owe anything, but you're not getting a big refund. Because if you think about a big refund, all that is a interest-free loan to the government. I mean, you could be using that money throughout the year. But like I said, they're not paying you interest when they're holding that money. So those are the allowances. The federal filing status is single or married. You can go down here. Now I already put in some pre-tax deduction as well. So the first one is the Sep Ira, and that's just an account that allows self-employed people to save for retirement on a pre-tax basis. It's similar to a 401k, but it has higher contribution limits, and people don't usually get a match within a Sep Ira. That's the one thing 401ks have over Sep IRAs, is that if employers give you a healthy match, then that's basically free money. So I put the percentage of my pay. It's exempt from federal, FICA, state, and local. All these boxes are checked. Now, keep in mind, FICA, that just means the taxes that support Social Security and Medicare. And then we go down to here, health and dental, $300. It's a little pricey, but I mean, we pay a lot for our healthcare in the United States, especially compared to countries like Germany and Sweden, Canada. It's pretty crazy. So I put that amount there. I put the fixed amount as well. You don't want to have this as a percent of income. That wouldn't make any sense. So you check all these boxes. It's exempt from federal, FICA, state, local. So that's the one thing about health insurance premiums, is that they are pre-tax. They lower your taxable income, so that's good as well. And then to kind of mitigate this, the government created an account called the HSA, or Health Savings Account, and you can save on a pre-tax basis for healthcare expenses and take money out without being taxed, provided that they're for healthcare expenses. It's very important that you make sure it's a fixed amount as well. You don't want to have it as a percent, so you can do federal and FICA. Notice how these two boxes right here, these two boxes right here, they're unchecked. And the reason why that is because some states like California, they actually tax HSA distributions. I know it's pretty crazy, but you have to be aware of that as well. So I'll put that in the description below too. And then you hit calculate. And then once you hit calculate, you can see your monthly gross pay, the federal withholding right here, Social Security, Medicare. Now, one thing I'm going to mention is you see the final net number, which is $3,300. If you're self-employed, be sure to take these two numbers. So the $270 more or less for Social Security and the $63 for Medicare. Be sure to add those two numbers. So that's more or less $330, kind of in that ballpark. Take that and subtract it from your net pay. The reason why that is because that is called the self-employment tax. So if you're self-employed, you have to pay double the taxes on Social Security and Medicare. If you're an employee, you only pay half, as your employer pays the other half. Fortunately for the self-employed, you have a lot more deductions and wiggle room in the tax code, and one of those include a above-the-line adjustment to your taxes, which is the self-employment tax. It's actually half of the self-employment tax. So that's something to be aware of. You can see your health and dental, the HSA, the Sep Ira right here. So those are the pre-tax deductions. And like I said, you just see all the withholdings for federal and California. And yeah, that's basically it. I mean, that's just kind of like a very high level overview of how to calculate withholding from your paycheck, or if you just want to kind of estimate the taxes that you'll have to pay based on your deductions and income. And also, I wanted to mention that this video it's not tax advice. I'm not a CPA. I mean, I've prepared taxes, but I'm not a CPA. So really, please be sure to consult a tax professional for actual advice. I mean, this is just like high level education. I've used this tool. It's benefited me. So I just wanted to share with you guys. And then also, I put some information in the description below as well about some tax tips for the self-employed, including estimated payments, and then some business tools that you can use if you're running an online business. Anyway, guys, I really hope you enjoyed this video. I hope it brought value to your life and to your business. Crush that subscribe button down there, give it a big like, and then tell me in the comments below, what have your taxes been like if you're self-employed or employed, or have you ever used something like this? I'd love to hear. Well, anyway, thanks again for watching, and until next time.